Hello and welcome to FEI Canada's webcast entitled Government Funding, How to Find and Keep the Money, presented in partnership with Alma Consulting Group. We have just a few announcements before we begin. The slides will advance automatically throughout the presentation. A copy of today's presentation is available for download in the Download section on your web console. At the bottom of your browser, you will find a help icon for technical assistance. You may ask a question at any time throughout today's presentation by submitting your questions through the Q&A panel. If your screen freezes or the slides do not appear to be advancing as they should, please try exiting and restarting the session, as it may be an issue with your connectivity. I will now turn the call over to Michael Conway, President and CEO of Financial Executives International Canada. Please go ahead, Michael.
Thank you, Ellen, and welcome everyone. Good afternoon and good morning to our friends out west. Here for an exciting topic about how to find and keep the money. With us today are Peter McCusker, the Eastern Regional Director of Alma Consulting Group Canada, Dominic Belli, partner of Norton Rose Fulbright Canada, and Nicolas Simard, a lawyer with Fasken Martineau Dumoulin. Peter's the Eastern Regional Director for Alma. He was a client of Alma's prior to joining the firm in 2009 and has been involved with government funding in various capacities for over 20 years. Peter's highly proficient in the latest developments around programs, as you'll soon hear, and translates his knowledge into helping companies effectively navigate the innovation funding landscape and creating strategic action plans that include government loans, grants, procurement programs, and tax credits. Dominic's a tax legislator who has represented taxpayers against federal and provincial tax authorities in cases before the Court of Quebec, the Quebec Superior Court, and the Quebec Court of Appeal, the Tax Court of Canada, the Federal Court of Appeal, and even the Supreme Court of Canada. Mr. Belli has argued over 100 cases in all Quebec judicial districts, as well as Ottawa, Toronto, and Windsor, Ontario. Nicolas Simard is a senior tax litigator at Fasken Martineau in Montreal, who has a master's degree in taxation. He has broad experience in all types of tax legislation matters, including income and commodity tax matters, SR&ED, taxpayer relief applications, and he has 13 years of experience in tax legislation, including 10 representing CRA, oh yeah, those guys, in Ontario. He has successfully pleaded hundreds of taxation cases before the courts, a seasoned negotiator in tax audit, objection, and litigation matters. On today's agenda, we see here, we're going to take a quick look at the history to set the stage about government funding. We're then going to dive into a few case studies with our litigators in the room to give us a few ideas of things to do and not to do. And then we're going to get into probably what you all came for, is how to plan for the money, how to find the money, and how to ask for the money. We'll then have a Q&A session for the audience, but I would encourage everyone to fill your questions in as you go for a couple of reasons. One, we may take questions during the presentation. And second, if you wait to the end, you'll probably forget that really hard question that we're going to stump our panelists with, which of course is the goal of today. So without further ado, I'm going to pass it over to Peter to bring you up to set the stage with the Jenkins report.
Thanks, Michael. So yeah, in the historical overview, we won't go too far back, but the Jenkins report was a real milestone in government funding and it set the stage for today. So we just wanted to have a quick look at it. So in 2010, the federal government commissioned a panel that was led by Tom Jenkins to review the entire $7 billion that it was spending to support R&D in Canada. The panel published their report in October of 2011 after about a year of research and deliberation. And there were 6 main recommendations, and we've listed them here. We won't go through them all individually, but by all means you can refer back to the presentation if you want to. The point is that the government didn't implement them all exactly as they were presented in the report. But the 2012 federal budget was their first reaction to the Jenkins report, and it definitely triggered 2 things. It triggered, first of all, a swing in the pendulum of government funding from indirect funding, which is tax credits and tax refunds, to direct funding, which is grants, loans, and procurement programs that are specific to innovation. And these were essentially the that swing was one of the first primary takeaways from the Jenkins report, and the second was really a tighter administration of all government funding programs, and not just historically the indirect ones, which were more popular, but certainly of new ones that were coming along as well. So 2012 really became a landmark year for the funding of innovation in Canada with the federal budget, and the evolution of the programs over the last 3 years have really impacted the landscape for funding in 2015 and in 2015 now, and as well for future years. So if we just recap quickly what's happened since 2012, there have been cuts to the SHRED program, the amounts themselves of the tax credits, but also eligible expenditures. Those took effect progressively over 2013 and 2014. The last 3 federal budgets combined represent a total of about $4 billion in direct funding for new programs, and also just topping up some of the existing ones. But really more importantly, what's really come out in the last few years is we're really in a cycle of compliance and, as we mentioned before, tighter administration when it comes to government funding. And it really applies to all programs. If we take SR&ED as as an important example, there was a new application policy published in 2012, subsequently led to a new form that has to be used to submit claims now. That came into effect Jan 1, 2014. Combine that with the fact that the government says that they've added 30% more auditors since 2009, and it's pretty easy to see that the government has changed the way that it evaluates claims and the way that it manages audits. And we'll come back to that a little later with some of the court cases we'll review, but it's not all doom and gloom, because in the end, in reality, today there's now more money and more programs to support innovation and scientific research in Canada. We remain among the global leaders when it comes to tax credits for innovation, and we've made a lot of strides in improving our ranking on the global landscape when it comes to grants and loans. We were lagging behind, and certainly in the last few years we've made some strides in improving that ranking. So the good news is that Canada remains an attractive jurisdiction overall for doing R&D and innovating. However, there are definitely some important factors to consider. So as the new programs have been introduced and the administration has gotten tighter, the factors have always been there, but now they just require more attention than ever. So, things like what are the consequences of combining programs? Every program requires that you support your claims with documentation. What constitutes enough documentation? What is documentation? What's the impact on intellectual property with one program over another? What are the options if ever you are in an impasse with an auditor over a claim? And what are the implications of going into objection or opposition over a refused or even reduced claim?
Well, Peter, it sounds like the bottom line is you're going to have to take government funding seriously. You've got to be proactive and have a plan. It sounds confusing.
Well, you definitely need a plan, and that we'll cover some of the steps a little bit later in the webinar.
Okay. Question is that you mentioned the importance of documentation for all programs a moment ago, and now anybody who's ever done a SHRED tax credit knows how important and how voluminous the documentation is sometimes. So we'd like to get a sense from the audience how they're feeling about their documentation systems and the records you keep. So here's a polling question, and we'd ask people to select how confident do you feel your SHRED documentation system is? Non-existent, unstructured, over-documented, or you're fairly comfortable but you're not quite sure because you've never been audited, or you're really comfortable because you're passed your audit successfully. If people could vote on which of those structures they would prefer, or which of those answers, as people are chatting, let's maybe talk a little bit about what constitutes documentation. Gents?
Maybe the first comment I would say, and this is Dominic Billy speaking, is oftentimes we realize very late in the process that actually no documentation was submitted to the auditor, to the objection officer, and sometimes we're in the middle of negotiation with a lawyer from the Department of Justice, and the first question is, could you provide me with complementary documentation? Because along the way, we have missing documents, and we simply can't answer our questions. And sometimes you feel like those documents should have been given, earlier on in the process. Discussions would have been better. Negotiations would have been probably the result in terms of dollars and cents would have been better. So I can never enough stress the importance of documentation, full and frank disclosure as soon as possible when the process starts and the discussion starts with the tax authorities. I don't know, Nicolas, whether you have the same experience.
I fully agree with you, Dominic. This is Nicolas from Fasken Martineau. The problematic when those documents do not exist at the time where the auditor comes in is that to recreate those documents after the fact can be a bit of a challenge, and you don't want to be in that situation. So specific documentation doesn't have to be made specifically for the audit, but what they require is that normal documentation, which is done in the normal context of SHRED, that is scientific research and development. Those normal documents should be kept as the projects or the expenses are incurred.
Okay, so we'll hear more about documentation in the first court case, but let's look at the results. And that's interesting. We see quite a mix of answers here. Really, it's almost tied across the board. Some people are really comfortable and fairly comfortable, and at the other end, people either have non-existent or unstructured documentation. Peter, what do you think about that?
It is kind of representative of what we find out there, and when we're working with clients. For every company that's got good, strong documentation, there's plenty that are either don't have any or it's just not structured. And unstructured doesn't mean that you don't have any. It's just sometimes it's more of an insecurity about your ability to pull it together within the context of SR&ED. So it is pretty representative of what we see out there in the field. It's interesting.
Okay. Well, we'll get into more of that in a sec. So we're going to cover, as we said, documentation, and Nicolas will take us through a case related to that. We'll talk about combining programs, different grants and SHRED and the like, and there's an illustrative case on that. And then we'll be back to Nicolas. General Motors had an interesting case about limitations on process of objection, and then finally a discussion a little bit about what expert witnesses are useful. So over to Nicolas.
I will talk today about Les Abeilles Services de Conditionnement, which is a decision that came out late in 2014, and it is applicable to basically all the SR&ED cases out there. And it's very interesting. Les Abeilles is a company based in Montreal, which sub-assembled parts for dryers sold by Mabe and GE, General Electric. And in 2009, to remain competitive with the Chinese market, there's a lot of manufacturing done over there, obviously. To remain competitive, it invested a lot to accelerate the process on its assembly lines, increase its productivity. And it claimed the costs of all of those investments, which constituted mostly of salaries. It claimed the cost as SR&ED credits and expenditures. And Revenue Canada decided to deny those expenditures, saying basically that they constituted routine procedures. As is the case very often in SR&ED cases, the parties each called their own expert witness to testify as to whether they thought that the expenses incurred constituted SR&ED. And the Canada Revenue Agency decided to call its own employee, the scientific advisor who had acted during the audit and who had basically decided to deny the SR&ED expenses. And the court decided basically that the fact that the Canada Revenue Agency expert was an employee of the Canada Revenue Agency was not in itself a reason to disqualify him. However, in the course of the CRA's expert's testimony, it became obvious that he was relying way too much on CRA guidelines to determine whether the expenses constituted SR&ED or not, versus using his own opinion as an expert in SR&ED. And for this reason, the court decided to give his testimony very little weight. This is very interesting. On the issue of the documentation, as is very often in SR&ED cases, that became an issue also. And CRA was basically alleging through its expert that there was a lack of contemporaneous documentation kept by Les Abeilles in order to prove that the SR&ED projects and expenses were indeed incurred. And the court decided that it is not a requirement, it is not absolutely essential to keep contemporaneous documentation in SR&ED claims, and for this reason it decided to in favor of Les Abeilles. And so what's the takeaway for Les Abeilles? Well, although contemporaneous documentation is not essential, it is fully recommended to keep such, because in a case where the CRA expert might not be found to be not credible, in a case where the CRA would have a stronger expert testimony, the lack of documentation could lead to taxpayers' SR&ED claims being denied. So basically, you have to prepare for the worst from the beginning.
Okay. Now, so that's interesting. Is this is something that's just really a lesson learned for CRA, or does it impact the taxpayer as well?
I think it impacts everyone. It's a lesson learned from CRA, and it has happened again, and it will happen again in the future, as we will see in another case with Dominique. However, I think that generally speaking, the CRA experts have to be very cautious when they testify, not to confuse their role as a CRA employee who made a decision on a matter versus the one of an expert who's being called to testify in court about his own expertise.
Now we talked about, so Peter, does this case affect documentation related to other programs like grants and loans?
Yeah, for sure. You know, when you look at tax credits, you're always claiming activity that, or expenditures that took place in the past. And with grants and loans, it's always about what's going to happen in the future. So in either case, obviously this case relates to tax credits, so it's about documentation about tests performed and whatnot. But on a going forward basis, when you with a grant and loan, you always incur the expense and then you're seeking reimbursement. And so you need to have documentation throughout the year to support the expenditures that you're claiming in grants and loans as well. So it isn't limited to tax credits. Documentation applies to all programs.
So how do I figure this out? You're talking about tax credits, grants, loans. Can a company do all of those things, or is that considered double dipping if you access multiple programs?
Well, you can definitely combine programs, but no, you can't double dip. So, companies have to deduct, for example, grant money received if they're claiming the same salaries for SR&ED tax credits, for example. And the next court case actually is directly related to combining SR&ED and loans. So maybe, as a appropriate segue, if Dominic, you want to take over and cover immunovaccine.
Yeah, thank you. In this case, immunovaccine, it's an R&D company which develops vaccines, and fully entitled to R&D tax credits under the Income Tax Act. So they're entitled to the general program, so they claim R&D tax credits on a regular basis. We can take for granted that it's a genuine R&D and that their tax credits are accepted. In 2004, Immunovaccine concluded an agreement with the Atlantic Canada Opportunities Agency, which was a federal agency established to support economic development in the Atlantic region. So it's not specifically for R&D projects. It's an agency that is there to support, economic development in Atlantic region. So on the face of it, you have R&D on one side for R&D companies, and you have the Atlantic Canada Opportunities Agency that is there for any sort of company so long as it is based in Atlantic Canada. So my first reaction is that there shouldn't be seen as double dipping, and the company should be entitled to its R&D tax credit at the same time as it could get a grant from the federal government. And in this case, the total amount is $3.8 million over a period of 4 years from 2005 to 2008. And the agreement had a series of terms, 3 of which are relevant for our purposes today. The obligation to repay the amount was contingent to Immunovaccine's revenue. So if there's no revenue, we're not talking about profits here, we're talking about gross revenue. So if there's no revenue, there's no obligation to repay the amount to the agency. Secondly, the obligation to repay starts 4 years after the receipt of the first installment, and there's no interest whatsoever. What's interesting here is that, Peter, you mentioned a few minutes ago that globally the amount of assistance by the government in Canada is $7 billion a year. So you would think that there's clear intention from the government to give as much assistance as possible. Under the Income Tax Act, you see a different pattern. Under 127 sub 9 of the Income Tax Act, government assistance is there, and it reduces the amount of tax credit. So whenever you receive assistance from a government, a municipality, public authority, as a grant, subsidy, or forgivable loan, technically you're not entitled to the grant, subsidy, or forgivable loan at the same time as you get your tax credit. That's exactly what happened here in the case of Immunovaccine. Because of the terms of the agreement, there was no interest. The amount of repayment was contingent. During the first 4 years, there was no repayment whatsoever. It was considered by CRA to be government assistance, and that's exactly what the tax court, the Federal Court of Appeal, said. So what's the takeaway? The takeaway is that if you want to have access to both your R&D tax credit and any other sorts of assistance, you have to enter into an agreement that any other business entity would have agreed to. The fundamental element that is in the tax court judgment is, does the payment made by the public authority pursuant to the agreement as the attributes of a commercial venture, such that the public authority in question is acting as a business rather than in a governance capacity. So basically, what the Federal Court of Appeal, the tax court, and I should say that the Supreme Court of Canada has decided not to hear this appeal, so it's final. The government will be deemed to act once under the R&D tax credit program or through a grant, but not both. If the government decides to give further support, the support will have to be done through an agreement that will reflect commercial reality in terms of schedule of repayment, a legitimate interest rate, default clauses, those kind of things.
Okay, so Peter, there's a question from the audience. It says, gee, does that mean interest-free loans aren't good?
No, not at all. Actually, just that, back to Dominic's point is that, you cannot double dip, so you can't get both for the same expenditures necessarily. And from a loan standpoint, there are loans out there that have nothing to do with SR&ED eligible expenditures. There's loans for commercialization, for capital equipment, and other activities that are otherwise not eligible for SR&ED and can be quite interesting.
So you stream one for one purpose and the other for the other purpose? Is that what you're saying?
Yep. Okay. And a company isn't contractually bound to use a loan or a grant just because they've been approved for it. So it can be a strategic decision that they make throughout the year, whether they're going to save those expenditures for a tax credit that will be filed with their tax return, or something that they want to submit for reimbursement right away because they don't anticipate being able to apply it to an SR&ED claim.
So our next interesting thing is about the details of a notice of objection, and I'll pass that over to Miguel.
I will be talking about the GM case versus the Quebec Revenue Agency that just came out at the end of January 2015. As you all know, GM manufactures automobiles which are sold through authorized dealers, and GM obviously offers a warranty on its vehicles. When the vehicle does break down, GM does offer courtesy transportation to its customers while their vehicle is being repaired. The courtesy transportation is actually offered by the GM dealer, and sometimes if the GM dealer doesn't have a vehicle available for the client for his transportation, it will rent a vehicle through third parties. And for this service and this payment, the dealer will charge back GM with QST and GST for those costs. GM will then pay the invoice to the GM dealer and claim the input tax credits, in this case the QST reimbursements. In this specific case, GM had paid between 2005 and 10 over $1 million in QST to the dealers, which it was claiming. And Revenue Quebec decided to disallow the reimbursements, alleging basically that GM had paid for the supply of motor vehicles. In the Quebec Sales Taxation Act, in this case, there was an exception saying basically that a large corporation, such as GM, could not claim the reimbursement for the supply of a motor vehicle. And so GM was very wise in making its argument at the court level, though. They came with an argument saying that it was not the supply of a motor vehicle that was done to them by the GM dealers, but it was the supply of a service. If it was the supply of a service, GM was entitled to its reimbursements. However, this argument was only made at the court stage. It had not been made specifically and in details in the notice of objection. A notice of objection is basically the first document that a taxpayer will file to the minister if he disagrees with an assessment. And in the case of large corporations, both the federal and provincial laws say, to some extent, although differently, that the taxpayer has to describe all of the issues that he's bringing forward as a basis to dispute the assessment. And so Revenue Quebec basically alleged at court, and this is a matter which was decided by the Quebec court, Revenue Quebec decided that, argued that GM could not make this argument as it was new and had not been made in the notice of objection. And so the judge had to rule on this. He decided that considering the wording of the Quebec Tax Administration Act, GM had made generally the argument that the issue in this case was the one of the disallowance of the credit, and that was sufficient. And however, the judge decided that although GM could make this argument, since the federal sections, the federal equivalent, were different and worded differently, maybe that this decision would not apply on the federal level. And so what's to take from this decision is basically that from the outset, when someone disputes an assessment, he should detail all of the issues in his notice of objection specifically and know where he's going. Otherwise, at least if he's not before a provincial court, that could prevent him from making all of the available arguments once in court, many months or years after the objection was filed. It's important to note that this matter was appealed, but not on the issue of the details in the notice of objection, and there's a similar case that was rendered, although on the federal side, which is called Ford. Interestingly, actually 7 days before the GM case was rendered.
Yeah. So, if I sort that out, Nicolas, it sounds like a company needs to think about its strategy in advance and provide all arguments in its notice of objection up front, rather than do as some of us do, is deal with each issue as they come up.
Definitely, especially if you are a large corporation. If you don't make all of your arguments from the outset, that could prevent you from making any further argument once in court, and you could lose a lot of money.
Now, you keep on referring to if you're a large corporation. Smaller corporations can just play it as they go?
Both the provincial and the federal acts that deal with appeals to court say basically that only if you are a large corporation you have to detail all of the issues in your notice of objection, probably because the amounts in issue are so much greater than if we're talking about the appeal of a smaller company.
Okay. Interesting. Now, I see that our next topic relates to expert opinions. Is what you said about an expert witness or opinion could be necessary for presenting arguments even before going to tax court?
Well, the technical context of most government programs is very subjective. So while this case dealt with a context that was not related to innovation, it does apply to government funding for innovation as well. And so the expert opinion can sometimes help resolve an impasse with an auditor and mitigate a lot of back and forth and save time and money in the long run, if you've set your arguments properly during the opposition process. So, and sort of as a segue into the value of the expert opinion and the timing of it, let's pass it over to Dominic for some comments on HLP.
Yeah, exactly. The experts will be necessary in the context of a judicial challenge to an assessment if we feel that the technical nature of the question needs a specific technical scientific knowledge. In civil cases, it is absolutely normal to file your expertise, your expert report, on the same day as you will file your motion instituting proceedings. In tax cases, technically at the federal level, you can file your expert report, 90 days before the trial, but it is highly recommended to hire the expert, sooner. Here in the HLP solution case, what's interesting is who can be an expert. My first reaction as a lawyer will be whenever I need an expert to hire an outside expert to give me, an outside opinion, review all the materials and give me his own personal opinion about, the scientific or technical nature of the case. Here, it's a voir dire, it's a trial within a trial, it's a decision on the legal question before the trial. The issue was whether an in-house expert, a computer specialist that had a PhD in computer science, working full-time for the Canada Revenue Agency, could be recognized as an expert. There was an objection because obviously this person cannot be an independent expert because he works full-time for CRA. But the fact that he is not independent doesn't mean that he cannot be impartial, give an impartial view, an impartial opinion to the court that could become useful, helpful to the court. And the answer was no. And if what's the takeaway of this case is that the perceived lack of impartiality of an expert witness will not automatically disqualify this person as an expert witness. Impartiality will have to be judged when evaluating the credibility and the weight given to such testimony. So you may be a full-time employee, technical employee of the Canada Revenue Agency or the taxpayer, because this is a case involving CRA, but the same conclusion would apply to a taxpayer. You're a full-time scientific employee of a taxpayer, and you want to be recognized as an expert witness, of course, it is possible. The reality is that once your report's filed, once your testimony is done, the judge will have to appreciate your credibility and the weight of your testimony based on the global context, and within this context is the fact that you work full-time for your employer and that your opinion and the value of the opinion may be diminished because you're not independent. You may be impartial, but you will never be independent.
Okay, thank you, Dominic. Okay, so if we shift a little bit now, we had talked a little bit about that the last three federal budget combined about $4 billion in direct funding. And before we move to the what, where, and how to find all this pot of cash, we'd like to poll the audience on your experience with government funding since this change in 2012 when the pendulum started to swing towards direct. And so you see on the screen, and I'd ask everyone to start voting. And by the way, please do record your Q&A as you go. I see a few questions. But if you look at the polling, what's been your experience on direct funding? You haven't applied. You've applied, but, oh, gee, you didn't get anything, and you're pouting, and you don't understand why. You've applied, and you didn't receive it, and unfortunately, you understand why. You applied, and you received it, and you're actively looking for more. And you applied, and you received, so much you can't even know where to spend it. And I'll give you FEI Canada's address. So if people would vote on the direct funding, maybe in the meantime, I'll take one of the Q&A questions that came in. And that, when we were talking before about large company versus small company, a question from Gil was, what constitutes large versus small? Is there a threshold?
For corporate income tax purposes, it's $10 million of capital. For excise tax and sales tax purposes, I think it's $6 million in sales per period.
Okay.
And SR&ED has some specific stipulations as well. On the federal side, it has to do with taxable income. The thresholds are $500,000 and $800,000, and that can change. That's $500,000 and $800,000 of taxable income, so profit, and that can change the impact of your determination as what's called either a qualified CCPC, Canadian Controlled Private Corporation, or a large corporation.
Okay. So we have the results, to which, frankly, I find surprising, or maybe not. 2/3 of you haven't applied for direct funding. And the good news, I guess, is that the people who have applied, you're rubbing your hands, you've received the funding, and you're looking for more, and no one has extra money that they don't know what to do with that they're going to send me, which is interesting. This is interesting because we do have a study that was produced last year by CFERF in conjunction with Alma, which I would encourage people to look at. And really it may explain a little bit about the results of the study. Gee, 2/3 haven't applied. We had one question. If you haven't claimed any government programs, what's the primary reason? That was the one of the questions within this study. And 2/3 of the people said they didn't think they qualified. And 13% were not aware of other programs, or they were time-strapped, didn't have time to investigate. And about 14% had a negative experience in the past, and I guess they weren't trying again. So that's, probably a really good segue into Peter. So where is all this money? I mean, if 2/3 of the people haven't, where do we find the money? And can you give us some hints?
For sure. So unfortunately, there's no magic wand. We can just wave and make money appear. And as those that have received funding, and as we saw in the poll, can certainly attest, it takes a structured approach and a plan. And so the first thing to understand is, what is their money for? At Alma, we break it down into these 7 categories that you see here. And too often companies think in the context of the silos of their internal projects, and when you're going to look at potential for government funding, you need to kind of look more at the silos that the government puts them in, and these are those that we've referenced. So the first step is knowing that indirect funding, so tax credits and refunds, are looking backwards in time, and grants and loans are looking at expenditures in the future. You need to first you need to figure out what those expenditures were and will be. So what have you spent in each of the categories in the past? What do you plan to spend in the next 12 to 24 months? And looking back is especially important, again, because that's money that technically you're entitled to, much more entitled to, because it's in the Tax Act, than a grant or loan. So once you've looked at what your expenditures are, it's always good to have a wish list. In other words, what extra projects could you do if the government was funding your planned projects to the tune of plus or minus 50%? So we'll normally prompt companies in asking them, what was the project that the president or CFO or someone told you didn't have the money for, or you had to wait on? And it's always good to factor those into your analysis as well. And then you want to make sure, again, you take all of that wish list, past expenditures, future, and cross-reference them by government category. And so let's go on. So once you've done that, then you can start searching for programs. Now, you can start searching for programs without all of this information. But you're likely to find yourself with a long list of programs and no idea what to do with it. So certainly having it laid out is going to save you time and energy. So it's important to get a few things clear in your mind before you start looking for programs. So grants and loans, they've got fixed budgets, so regardless of how eligible you might be, when the money's gone, it's gone. They're definitely more of a competition than tax credits, which are part of the Tax Act, and which are more, as I said earlier, an entitlement than a grant or loan. And some programs have fine print you need to be aware of. So, for example, one of the programs in the family of the IRAP program, which is Industrial Research and Assistance Program, states that the grant has to be repaid if the technology or the intellectual property is sold to a foreign company within a certain number of years of receiving the grant. So if you got your grant, you sell your technology within, say, 5 years, well, you need to repay it. So it's important to understand all the implications when you're accepting government funding. And finally, just as be prepared, despite all the cuts and tighter administration, don't be surprised if you find that SR&ED is still the most generous program in the Tax Act for R&D. Certainly doesn't mean that you don't want to look at other possibilities in grants and loans, but as far as what you are really, truly entitled to and are not going to compete for within a closed envelope of money, certainly SR&ED seems to be the leader. So what we've got here now in the how to find the money, we've provided a list of websites. And on the next slides, there's websites per province. But if we come back to this, here is a video that is in real time and is basically showing you how easy it is to go on to this Canada Business Network, and by expense category, by province, and by type of business, you can actually come up with quite a detailed list of programs. So this is live, so in less than a minute, by putting in some of your say KPIs, you end up with a list, and here it's scrolling through the list of different programs that came up based on a manufacturing business in Ontario, and this is just for grants, contributions, and financial assistance. You can actually do the same search for loans, loan guarantees, tax refunds, wage subsidies, equity investments. So it does break it down quite a bit for you in the way of different potential programs. So the list, though, is really the starting point. Then you need to definitely go through the list of programs and decide which ones are for you.
Wow, that's a lot of programs. I'm sure people will come back to hear and play it maybe in slow motion because you went through in 1 minute a whole bunch of programs. I love people to give people guidance in terms of how to find certain things. So, for example, one assistance program close to my heart would be how would members get a subsidy to join FEI Canada's CFO Leadership Beyond Finance program?
Well, so as that list was scrolling down, and for those that refer back to it after the presentation, you'll see that there's a program called the Canada Job Grant. So it's definitely the most natural fit for the program. It's a federal program that's administered by the provinces. So candidates from most provinces would be able to get a grant for attending the Leadership Beyond Finance program. But it's not the only one. There's actually quite a few programs for hiring and training. And certainly, depending on what province you're in and by using the general site that we were just on, you can definitely comb through those to find all the different ones that could be applicable.
So to find other grants for training, I'd have to comb through each site and the list of programs?
Absolutely, yes. So somebody's got to do it. So whether you do it, whether you assign some internal resources to do it, certainly Alma has developed some proprietary technology for filtering the programs in our database and are able to cross-reference them with internal projects. So we can definitely make it less painful, but again, it's all about availability of resources.
Right, okay. And there are other provincial programs as well, right?
Yeah, so all of these sites are sources of, some of them are as good, not as great as the first one we saw, but the first one definitely gives quite a bit of information.
Right.
So as we move on now to, how to ask for the money. So, most companies have a business plan. Sometimes it's up to date. Sometimes it's not. So it's good just to have whatever you have. Don't necessarily go crazy changing it too quickly until you know what programs you're going to go after. One of the things that's very important when you're going to meet the government for any program, whether it's a grant or a loan, is to be able to demonstrate some sort of project selection process. And we list StageGate there because it's one that's relatively well known, but any semblance of a go, no-go process where you that shows that the projects that you're going forward with there's been an analysis and it's been determined by the leaders in the company that this really is the most beneficial programs for the company or projects for the company. And from an innovation funding plan standpoint, again, until you get to the application process, you definitely want to have available some sort of executive summary per project that includes a scope, some semblance of a budget, and the timing of how it's going to all roll out. This will help your probability of success, certainly in the long run. And so, the best way to present and describe your project for government funding may be very different from its internal context. And again, I come back to the reference to silos. Too often companies are looking and sticking within the silos of their projects internally, and really what you need to be looking at is the silos that the government puts the eligibility in. So you want to be prepared to adapt your plan to the program and certainly to the reader to avoid getting caught up in your own internal press clippings and kind of losing them on a whole bunch of information that may not be very interesting to them. So focus on the relevance is the takeaway here. And just to wrap up, if you haven't looked at your government funding strategy since 2012, whether it has to do with your SR&ED or it has to do with grants and loans, it's definitely overdue. Programs are in constant evolution. Last year we had programs that had determined submission dates. Now there's a lot of them are wide open, so you got to hurry up, or you just might miss the opportunity. From an SR&ED standpoint, undoubtedly you need to adapt to the changes. And as we were saying earlier, if the money's there. Don't leave it on the table. You need to appoint some resources, whether they're internal or external, to track these things.
Okay. So the good news is there's money out there, but it sounds like it's a little bit of a minefield. We have a few questions from the audience. I'd like to get to a few of those. You talked about, I guess people are realizing the direct versus indirect, and this is Brian always has really good questions. He says, how do you determine whether you have a better shot at receiving assistance from a direct grant or from a SR&ED claim?
So, as a general rule, you'll always start with the tax credits and exploit them as much as possible because, again, they're more of an entitlement than a grant, for example. So
if you meet the particulars of subsection such and such of the Tax Act, you get your money.
Pretty much. And in the SR&ED context, it has to do with the 2012 application policy. And then eligible activity, which again are listed in the Tax Act. So, how do you determine what's better? That's going to come live as you go throughout the year. So as I said earlier, there's no harm in applying for a grant or a loan. The worst thing that can happen is you're going to get approved for it. And then as you go through the year, depending on the turns that the project takes, if you feel confident and you've got, again, either from internal or external resources, validation that the SR&ED context is strong, well, then you'll save that expenditure and claim it for SR&ED. But if it looks like it's taken a turn on the weaker side of eligibility, well, you may, for all kinds of different reasons, one of which might be cash flow, is just to say, well, let's cash that chip in now and get the refund from the government right away rather than waiting till the end of the year once we file our taxes 6 months after and finally get assessed and get that money. So there's a few different variables to consider when you're making that decision.
So here's another question, and any of you fellows feel free to jump on it, and it's talking about innovation. Somebody's asking the baseline question: what constitutes innovation? I'm sure that our lawyer friends have spent a lot of time arguing that in court.
What exists today didn't exist yesterday. That's innovation. But now, in terms of the legal definition of innovation, you can find as many definitions as you will have cases.
I agree. And it's funny, we often confuse innovation with research and development, and we often confuse research and development with scientific research and experimental development. And there is a distinction between innovation, R&D, and the context of SR&ED eligible activities. And that's a pretty broad question. We might need an entire webinar on that alone, actually.
That's interesting because, and you will see tons of cases on R&D in which the technology exists, the knowledge is there, it's been there for a while, but you want to improve it. For instance, cars exist, rockets exist. You can move with them, but can you accelerate, to do exactly the same distance, in less time? That's innovation. That's R&D. So sometimes the line is very thin, and scientific and engineers, they have their creativity is without border.
And just to try to save money in making something, to combine existing process, to try to make it more efficient, to save money,
yep,
will actually qualify as SR&ED.
Okay, we have another question, and still time for a couple of questions. This one's quite interesting. Are you aware of circumstances where a grant application was rejected due to not passing the financial viability test, when in reality the company had strong support from a private equity sponsor, for example, or a lender group? So what is this financial viability test?
So it's often misinterpreted. It really has to do with the company's ability to commercialize the technology, and sometimes it's not just related to financial backing. Sometimes it has to do with the actual contacts that the company might have, their ability to commercialize the technology. Either they've determined that the market isn't ready for this technology, or the channels for commercialization they might be there, but maybe they don't have confidence in the company's ability to execute or to reach those channels. So, and it's very important to remember that in a grant context, it doesn't mean that you didn't meet the eligibility criteria. It just means that whoever reviewed your file didn't rank you high enough to make it into the applications that were awarded funding. So doesn't mean you were entirely rejected. It just means that you didn't rank high enough in their standings.
On the direct side.
Yeah.
But, okay. So I think we have time for two more. Here's one asking about jurisprudence. Wow, there's a big word. Around the definition of contemporaneous. Is it daily, weekly, monthly?
Well, this is Nicolas Simard. Contemporaneous basically refers to documentation which is created as the expenses are incurred to do the SR&ED and as the projects are being undertaken. And this is what we are referring to here. It's not yearly, it's not weekly, it's as you do the project. You could do an entire project within 2 days if you wanted to, and have 300 people work on it for 2 days and do your documentation after your 2 days. That would not be a problem. You could have it or make sure it's updated every month if you wanted to. There's no limit. Actually, what's important is that you note the hypothesis and the criteria for determining whether SR&ED can be, whether expenses are eligible for SR&ED or not. They revolve around making sure that you've got notes of what your hypotheses were, what challenge or uncertainty did you come up with in trying to do something else that was never done before, or in trying to improve a process. That's what you need to record and have notes about.
Okay, so that dovetails into one other question, which they're really coming in at the end here now. Is SR&ED available for companies that take an existing product and find a way to produce it cheaper? Or does it have to be rocket science of something that's never happened before, quickly?
The way that's presented right there, no. But it's definitely worth a conversation, because normally when you're making something for less, there's a change in components. There could be a change in ingredients that might be used if we're talking in a food or a chemical context. And all of those things lead to uncertainties around the outcome of making those changes. The question becomes, how did the tests you did to get to that end result, how did it advance your knowledge? Was that something, were these solutions available in the public domain, or did you have to go through a series of iterations in order to get to the end result?
Right.
If so, absolutely, then it could be
part of it is in the presentation.
Absolutely, and in the interpretation and technical positioning.
And the answer is actually in the question. Find a way to produce it cheaper. What does find a way involve here? And that's what Peter's saying, basically.
I would take cheaper out, and then
Yeah, for sure.
it would be better.
Yeah.
Okay. So that brings us to the top of the hour. There's two other things which are probably really appropriate to close with. I'd like to thank one of our viewers who said, this has opened my eyes. Glad you took this webinar. Thank you, Gil, for the positive reinforcement. And Chris, you have a question that I'm sure our friends at Alma would love to get back to you on. You said, how do we get started with Alma on direct funding? Do you take a percentage of what the business receives? I don't know if you want to get into your compensation arrangements, but the question's been asked.
Yeah, for sure. So the first step that we do is we actually can produce a report. It's basically a report of all the different programs that are available for your planned expenditures, and an action plan on how to go about getting them. And that's a fixed cost. There's a number of programs out there that don't allow success fees. So in those cases, no, we work on a fixed fee or some sort of hourly rate that's determined in advance. For programs that do allow success fee, that's really the most win-win scenario. We put our expertise in play. Company gets money. We share in the success. Company doesn't get money. Then we haven't costed anything. But it does all start with that report and action plan, and happy to go through that in detail with anybody that would like to know more.
Okay. So the last question was Curtis's, and that is this being recorded? Yes, definitely it is. It will be posted on our website for retransmission. So you can go back and play that video over and over again that Peter went zipping through all those things, and that is great. So now it's the most important part for me is to thank our presenters, Peter McCusker, Nicolas Simard, and Dominic Belli, who we just zipped through a fascinating hour. Their coordinates are there if there were things that they mentioned that you need to come up with a little bit more elaboration on. I'm sure they'd be pleased to hear from you. And thank you very much for attending, for your presentations. And finally, I guess back to the coordinator on the survey that we would ask you to take to give us feedback on this presentation.
Thank you, ladies and gentlemen. This concludes today's webcast. To ensure that we continue to provide quality webcasts, please take the time to fill out the survey that is currently on your screen about today's FEI Canada webcast. We appreciate your feedback and have a great day.